What's up, everybody? It is Friday, October 1st. What's going on? All right, the numbers are in. The numbers are in for the month of September. The numbers are in for the entire fiscal year. Fiscal year 2021 is over, and I got the numbers for you. Okay, so first of all, total spending was $7.74 trillion for the fiscal year. Remember, the fiscal year started October 1st, 2020. It ended yesterday, September 30th, 2021. $7.74 trillion. That is a record. That was up $875 billion over the same time last year. The deficit for fiscal year 2021 was $2.91 trillion. That is a nominal record. And that was about 12.8% of GDP. Okay, we had bigger, like World War II in 1941, I think we had something like 34% of GDP. Imagine that. I mean, if we had something like that now, it would be like almost a $7 trillion deficit. But it ended up at 12.8 trillion, the deficit, 12.8% of GDP, and the deficit of 2.91 trillion, that was up 175 billion over last year's deficit. So think of that. Remember, I explained how to think about the deficit. That is net transfers. When the government spends, 2.91 trillion more than it removes in taxes, that adds to the financial balances of the non-government, both here and the rest of the world. There's a total transfer of 2.91 trillion. That's why personal savings went way up. It's not because we didn't go to movie theaters and restaurants, because obviously if you don't go to a movie theater and a restaurant, then the movie theater owner and the restaurant owner sees their income and savings go down. Okay, in order for total dollar savings to go up, the government has to spend more, transfer those dollars over to the non-government. That's us, plus it includes the rest of the world. That's why you have big surpluses like in China and Japan and places like that. It's a net transfer. What else? Here's something very interesting. The month of September ended with a total flow, a total amount of spending, government spending, of $576 billion. All right? That was like 54 billion less than August. All right, now it's interesting because today they were talking about September was one of the worst months for stocks all this year, or for a long time. And why? I mean, you saw a removal of 54 billion in those flows. I love it here because I have people commenting, "Oh, Mike, flows, the market doesn't follow flows. You're an idiot, you're a jerk, you're a retard. You're this, you're that." Okay, follow whatever you want. I'm showing you right here. This is fact. This is how it works, is that these flows end up going to corporate profits. They end up pushing up the stock market. We were down. The flows contracted by 54 billion in September. Why? Because it was the end of those supplemental unemployment benefits. I was already talking about that. Like in June, in May, I was saying, hey, 26 states in June are already going to start to end those things. And then in September, they're going to end completely. And we saw, and really, like if you look at what happened to the unemployment benefits in September, I mean, that was a fiscal cliff. That was a fiscal cliff. It was unbelievable. I mean, graphically on a chart, I mean, it really just like fell off the edge. What else? Now, here, look, check this out, all right? If you want to talk about fiscal flows slowing down. So we ended up in September with a net flow for the month of 576 billion. That was actually lower than where I thought we were going to come in, because I thought we were going to come in around 600 billion. Anyway, the number was 576 billion. But in March, it was 984 billion. All right, so it was like 408 billion reduction from March until September. A half a trillion less flow from March until September. So that's really taken a lot of fiscal support out of the economy. That's why I think, let's talk a little bit about today's stock market, because I had people here going, woo, correction's over, hey, we're going back up. No, I don't think so, okay? Today you had some news that Merck, the big pharmaceutical company, they came up with some pill that cuts COVID sickness and death rates by 50% or something like that. So there was like a euphoric reaction. Hey, if we can get a pill that ends this pandemic, or at least, puts it kind of like into just a chronic category where you can treat it and you don't have to be worrying about people dying so much. You just pop a pill. That's something to get excited about, because again, if you want to talk about this whole stagflation meme that's going around, remember, like it started out as hyperinflation, they're printing money, the dollar's going to collapse, they're printing money. Meanwhile, the dollar's like really, really strong. Where are all those guys anyway who said like, the Fed's printing money and the dollar's going to crash? Like, you don't hear a peep from them anymore. But now they're talking about this stagflation. The whole thing, the price pressures are still related to the pandemic. I mean, if you listen to any serious discussion about this, from producers, from manufacturers, from distributors, shippers, they're all talking about, supply chain issues. They're all talking about supply chain issues. And this is a pandemic related thing. So obviously, if we could end the pandemic with a little pill, that would be fantastic. That would be really, really great. So that was the big headline today. The market bounced off of that. We didn't reverse the declines from yesterday. I mean, we came close, right? At one point we actually did. I mean, the Dow was up over 600 points. I think it ended up like 480. NASDAQ was up, S&P. They didn't, I don't think they reversed yesterday's decline. In any case, got to stay focused on those flows. And they're still slowing down. Like I calculate now that we're probably at a monthly spending rate, or we're going to be at a monthly spending rate of around 500 billion. And that is down roughly about 20% from June, July, August. Okay? So 500 billion, even though we did 576 billion in September, the last week in September I saw even a more pronounced slowdown in those fiscal flows. And they're going to average something like, I'm saying around 25 billion a day, 24 billion a day, maybe even a little bit less. Certainly if we hit the hard debt ceiling October 18th or whenever that day is that Yellen said, it's going to be a lot less. But I'm trying to be optimistic on this, and I'm going to say around a 500 billion monthly spend rate. That's not recessionary. It's not the end of the world. But the stock market has to adjust to reflect a slower growth rate in earnings and corporate profits. And I think that's what we're going in now. So we're going to give back some of that rally that reflected a much higher monthly spending rate. Okay, we're gonna come back down to, align more with where the fundamentals are right now in terms of the fiscal support. And hey, you never know. Maybe this Biden thing is gonna pass. It doesn't look so good right now. If that passes, that would completely change the scenario, because then you're gonna get, we're gonna get injected with another big stimulus, even though that plays out over 10 years. I mean, the addition right now would be That would be meaningful. So that's where we are, folks. That's where we are. Weekend is here. So I'm wishing everybody a nice weekend. Don't forget, go to my website, sign up for a 30-day free trial for MMT Trader. I'm the only one who has an applied approach to MMT. Nobody else has that. Okay, I take the concepts and understandings of MMT and I help you use that. You know, that's applied knowledge. It's not just knowledge like, hey, yeah, I understand MMT, great. Okay, bye, I'll go do my thing. No, this is, hey, you take that knowledge and you invest and you make money with it, right? I mean, that just seems logical. I mean, if you have this knowledge that's useful, use it to make money, elevate yourself. All right, everybody. So the website is pitbulleconomics.com. See everybody maybe tomorrow. Bye.